Okie dokie. So the recording has now started. So anybody that isn't here live, you'll be able to watch this. Okay, so today's lesson is going to be really, really, really cool because I really want you guys to really go back to the basics, okay? Now, some of you are brand new and you're not really going to understand this, but some of you are, you're going to have a bit more experience. But it's really important that you understand some of the key concepts, okay? And let's hope I can find things here. Oh, wait a second. Now, if you don't really understand kind of the key concepts, like what are we really trying to accomplish by all of this? Like really, what does it really boil down to? So let me just get some pictures here. I want to show you guys a few pictures. Okay. And it's really important we get back to, how a floor works or how a market works. Okay. Now, for you guys that just watch this video, it's going to be really important. But it's really important that you really truly understand what we're trying to do, right? Like, what are we really trying to do here by all this spreadsheet, by following the order flow, and by looking at liquidity, by looking at levels? It really all comes down to levels, right? So if we go back to the very, very basics of what is important. Okay, so remember, this is your first day on the job. You're this guy right here, okay? And you show up. I chose him because he's got his hand on his chin and he's going, this is all really strange. And, your boss says to you, I want you to take a piece of paper, right? I want you to take a piece of paper and I want you to write down what you see and who does it. And he particularly points out these big 5 institutional traders, okay? So the bell opens and the asset is at, let's just say, $10. Okay, we just use a round number. And then all of a sudden, you see, we'll call him Big One, right? He starts buying, and he buys 100,000 shares, and the asset goes to 10. Okay. So big guy 1 starts buying. Now there's a bunch of other asset. Did we just lose the screen? Did you guys lose the screen? Or can you still see the screen? You still see the screen? Yes. Okay. Okay. So a big one drives that price to 10.10 by buying 100,000 shares. Okay. All right. Now, just tell me quickly, is that different than Big One driving that to 10.50? It's different, right? So that's really, really, really important information that as a floor trader, I'm going to be watching, right? So Big One drives it to 10.10 versus driving it to 10.50. What's that telling you about that market? Let's say instead of going to 10.10, it goes to 10.50. What does that tell you? What's the information that you're getting back from that market? Yeah, so it's telling you, as Dale said, that it's not really telling you that buyers are in strong control. It's just telling you that there are less sellers in that market. There's less resistance to that market, right? That's really what it's telling you. Does that make sense? So if it was able to go to 1010, it would tell me one thing, and if it's able to go to 1050, it would tell me a completely different story, doesn't it? Excuse me. Completely different story. So let's just get a visual here. Here's 10. Biggie 1 comes in, and he drives it to 1010. Versus him driving it 1050. Right? Now, when I'm on the floor, I can see that, right? I can see Biggie 1 starts buying 10,000, 20,000, 30,000, 40,000, and I can see who's selling to him. Does that make sense? So if I see that Biggie 2 is standing in his way and is holding that price down to 1010, right? So in this scenario, Biggie 2 is resisting B1 buyers buying, right? And that is what's holding that down to 1010. Well, what happens if there's no B2 resistance? B2 just stays out of the way. And price goes to 1050. You can see that the context really change, right? There were no sellers getting in the way, right? So what if I saw there was just a bunch of little guys selling? As he's buying, little guys were selling to him. You can see that context is everything, right? Context is everything. So how the price is moving becomes critical. Because in the first 3 minutes of him pushing that price to 1010, what's the story that I'm going to take away from this scenario? Yeah, of course I want to be buying, right? But because I see a giant in the market and he's aggressively buying. But do I want to be jumping right in at 1010? No, I don't. Because I saw that another giant was giving him a little bit of resistance. The net result was 1010. But when I saw that there's no resistance and all the big guys stayed out of the way and went to 1050, and there was only little guys selling along the way, so that picture looked more like this. Right, so that picture looked more like that. Right, and along the way there was little guys selling, right, but nobody big, right? So hold all your questions to the end, okay, guys? Okay. So when I see that, now I've got a completely different attitude about what I should be doing. You guys agree? Now there's more urgency for me to get into that market. Right? So now let's say the first 20 minutes go by and first 10 minutes go by and we're at 1050, right? Now all of a sudden, what if I see B2 at 1050? B2 stayed out of the way, right? So B2 at 1050, he starts hammering and he starts selling, let's just say 50,000 shares. And the net result of that, we're going to give you two scenarios. The net result of that is that from 1050, that net result pushes it back to 1020 in one scenario. Okay. So now a big giant steps in and he pushes it all the way back to there. That's scenario one. What happens if a different scenario happens? What happens if B2 still steps in and he sells 50,000? Price doesn't move. What happens if B1 absorbs all his selling? The price doesn't move. Maybe it moves a little bit. What happens if B3 steps in and absorbs all that selling? Right? So remember, as a floor trader, I just saw that happen in real time. I saw 50,000 come in and B1 or B2 or B3 or B1 or B3 just absorbed it. So price might have gone sideways for a little while. It absorbed all that selling. Now I have completely two different ways of viewing that market, correct? Do you guys agree? So you tell me, scenario one, where they push it back down to 520, and then you start see B1s jumping back in at 520, right? Should you be buying a lot or maybe just buying a little? Obviously, you want to go with the smart money. So tell me what you do in scenario one versus scenario two. Right? Okay. So total different thing. Exactly. Philip had the right answer. The market, it's still too early. We don't have any clarity in scenario one. we have a little bit more clarity in scenario 2. Because in order for scenario 1, to happen, they push it back down to 520. We would need to see that more moderate buyers are able to push it back higher. So you can see the permeations here are incredible. What if it takes 20 minutes to push it higher? That's one story, right? What if they push it higher in 3 minutes? That's another story, isn't it? So now our context begins to change. It's not only what they do, but it's how they do it. And now me sitting on the floor, I'm watching all of this. Now remember what I'm doing. I got a piece of paper in my hand and I'm writing down all of these key levels, right? So in this case, 1020, and in this case, 1050. These become key levels, right? That level right there and that level right there. So sorry, guys. I couldn't hit the mic button before I sneezed. Thank you. Okay. So, different story, isn't it? What if that doesn't happen? Now, what happens in scenario 1 where they absorb all this price, but it goes sideways for 25 minutes before it goes higher? That's a different story too, isn't it? Versus if they just absorb this price and in 2 minutes it goes higher. And it goes to 1075. Are you guys starting to understand what you're really trying to do here? This is how I'm going to turn you more experienced guys into master traders. Right? You got to remember, what are we doing when we're looking at these prices and these movements and we're building a context? It's an unfolding story. So it's not just what is happening, it is how it's happening that becomes critical. Because what you're trying to do is you're trying to do the most important thing that we do as traders. And what is the most important thing that we do as traders? What is the one thing that makes us money? Go ahead, take a guess. Some of you will get it right, some of you will get it wrong. But guess, I want to see. Yeah, that is true. Not losing. What's the most important commodity that we have? The most important commodity we have. What's trading all about? Okay, value. That's true. And give it a second here. Okay. So you came close, right? The absolute most important commodity that we have as traders, by far, information. Do you guys remember the movie Wall Street? Right? Why did Michael Douglas become a billionaire? Because he got information. Do you guys watch the movie? You guys watch Billions? Right? Billions. What's that main character in that movie do? He gathers information. Why does Goldman Sachs pay analysts $500,000 a year and specialists $500,000 a year in salaries? Why? Why do they do that? Because they just like to look important? It's all about getting information. Why are data scientists the number one commodity right now on Wall Street and quants? Because it's all about information. The more information you have, and we talk about this in other videos, the more rocks you turn over, the more money you make. Period. Now, having information is only part of the equation. So what information do we have that's readily available to us? Well, we have the footprint of what these smart money that paid that $500,000, we have the footprint. They can't hide it from us. They can hide the information from us, right? But they left that footprint. And that footprint said and told us a story. And it told us a very specific story depending on the context in which that information is bought or sold. Right? So in the case of day trading, what real information are we looking at here? Well, we're looking at the market maker who can see the depth of that market. Right? That floor trading job still exists. He can see the depth of that market. Right? So that's what we're looking at. So whether I was sitting on the floor and watching this guy step in for 100,000 and then this guy resisted for 50,000 and this guy stepped back in for 100,000 and this guy resisted for 75 and then this guy resisted, starts selling it for 200,000, it's the same thing, right? Price is everything. Price is telling me what the net result of all of that information is. And that is why we gather it, right? And that is why when you're doing your order flow spreadsheets, you have to understand what you're really looking at when you're doing it. You're looking at the net result of all the information, in this case, mostly the market maker during day trading, but also there are larger time players in that field. Okay? So a lot of the times when I'm watching a market, I don't just look at those candles like you see those people. Candlesticks are everything. The Doji and the Hakana, the engulfing cab pattern mean that we're going to reverse the market. You should buy my book on candlesticks, and I am a candlestick expert. What a fucking crock of bullshit. It's just an arbitrary period of time. It doesn't mean anything, right? It doesn't mean shit. It's just an arbitrary period of time. So let's just run a little scenario here. Big giant, buy, 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 buy. Stock goes to, the price goes to 1050. Now, all of a sudden, it's just a lull in time, right? He doesn't want to buy anymore because he's just waiting to see what happens. And a bunch of retail traders push the market down. Bunch of very small retail traders. The big giant stops buying. And over the next 5 minutes, a bunch of really small retail traders push the market down to 1040 on bear volume because the big giant just stopped buying, and it creates a doji. That's a reversal candle. Oh my God, there's resistance. Get in. The big giant just took a break for 5 minutes. He went to take a piss. Right? He got tired. His jaw got sore. Okay? The candles mean nothing. It's how those candles are printing and the way that they print that tells that story. Does that make sense? So when you're watching actual candles, one of the things that I do is I like to watch tick by tick, right? It tells me a completely different story than when I look at it in hindsight. Right? So let's take a look at let's say a 1 minute period, right? So let's just say it took 1, 2, 3, 4, 5, 6 minutes to 7 minutes, say 7 candles, 1, 2, 3, 4, 5, 6, 7 candles to get price to 1050, right? Now let's break down those candles. How did they actually start printing? Right? So let's say the first one inside that 1 minute candle was like tick 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 tick, and that was 1 minute, right? Inside this 1 minute candle, it just went tick tick tick, and it just stayed there. Inside this 1 minute candle, it went tick, 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 and it just stayed there. Inside this 1 minute candle, it just went tick, 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 and stayed there. Now inside this negative candle here, let's just say that it just went tick, 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 tick. That negative candle right there. So not only does the candle and the way it moves get how it gets to 1050, help build a context, but by actually watching that price movement builds an even bigger context, right? Because now I can see that there was some selling in here, but they closed it strong. There was no resistance here. There was a little resistance here. There was no resistance here. And there was very little resistance there. You guys have light bulbs going off in your mind right now. I hope you do. Because this is really where the rubber meets the road. Okay? It's not just what happened. It's how it is happening, where it is happening, and when it is happening that builds you the context of what you should be doing in the following 5 minutes, in the following 10 minutes, in the following 30 minutes, right? Now, I told all you guys, give me a year of your life and I'll turn you into master traders. Did you think I said that because like this is really hard shit? No. I didn't say it because it's hard. It's actually really simple, isn't it, guys? You guys that have been with me for a while, you agree it's actually really simple to make money, right? It's pretty easy, right? You don't have to be a rose color. But if you want to be a master trader, you want to be somebody that can exploit all market conditions. The reason I said give me a year of your life, because I have to teach you what you have to look at that is important. Remember what we are doing. We are this guy right here, and we are gathering information. And in this case, it was really, 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 really easy for me to do it. If you think it's easy now, the way you guys make money, just imagine how easy it was for all of these guys that were locals on this floor. 95% of them were millionaires. Maybe not that many, but they were making really good money, right? They had nice homes. They made consistent money. And most of them were uneducated and didn't graduate high school like I did. Why? Because of information, right? The more information you have, the more money you make. But the caveat is, the trick is, what information is important? And what do you have to look for, right? So step one, you guys that have been with me for a long time understand it's about value, it's about liquidity, it's about levels, right? That's all it's about. But it's how did you get to value? What happened at that liquidity? Did they use that liquidity to sell into? Did they use that liquidity to buy more? What happened at that value? Was the reaction strong and hard and aggressive? Or did they accumulate slowly at that value? And so the time comes into the minutia, right? So when we get to a big level, right? So let's just say that buyers are in control of this market, and I see they're buying. And now we get back to where I think is value, which is about 1040. What's really, really, really important to me, what I'm looking for how do they deal with that value? Now, if they slowly accumulate it and then push it higher, that tells me there's probably a lot of size in there, right? There's probably a lot of size in there. Different story. What if they just get there and they reject it really hard? Well, it just tells me there's more urgency in that market. And so now I have to adjust my behavior and be more urgent. And be more urgent. So let's say I decide to buy off of this level here. I have a story that's happening. I should see urgency there, shouldn't I? I shouldn't see it fucking around. I shouldn't see that. But if I saw that previously, I wouldn't be too upset about that situation, right? Does that make sense, guys? So and that all comes down to watching that minutia. And I just gave you an example on the 1 minute candles here. So when I'm watching a stock, on any given day, that's what I'm watching, right? Now you can look back and get an idea, but if you can actually watch that stock in real time as those candles are printing, it's telling you a story. Right? So here were my trades on Friday. We'll use penny stocks as an example here. I wanted to short EBK because look at this horror story right here. Right? One sec, guys. Look at that horror story right there. We're on the backside of that move, right? So when this market opened and I'm watching these candles print, right? I'm watching how they're printing. Are these big green candles happening fast or are they happening slow? Are the red candles happening fast or are they happening slow? Right? One sec, guys. One sec. Okay, guys, hang on a second. It's important. Sorry, that's my friend. That's a billionaire. When he calls, you take his calls. You don't ignore them. Okay. So you're watching how that candle is printing, right? Is it printing fast and hard? You can see that the volume in this case, like it just ran into a brick wall, right? And stopped on a dime with a massive volume. That's telling me, and then when it's retracing like that and it's coming down, that's telling me that those buyers can't do shit, right? Remember, I'm just pretending like I'm back on that floor. It's telling me a story. And what I saw was this guy over here, buy, 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 buy. And this guy here, sell, 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 sell. And his buying resulted in barely nothing. I mean, it's a 45-cent move on a $3 stock, but you get the idea, right? That should have resulted in a lot more, shouldn't it? It didn't. I have a context, right? Now, this is very, very, very advanced stuff. So don't try it. Don't try to trade off of it. Watch it, learn from it, but don't try to trade off of it because you're just not good enough, right? This is Muhammad Ali stuff. All right, Mike Tyson stuff. So later on, when I saw the market pump up like that, and I happen to be at liquidity, and I happen to be at value, and all that volume came in, and they couldn't do shit again, it should have busted through and gone to 5, like it did here. And it couldn't do shit. Does that mean it won't? But I'm seeing that it can't. I'm seeing that they're having a big struggle. And I've seen history. That's a pretty easy short for me, right? Now, it didn't work out as quickly as I wanted it to, but I made really good money on that little trade. I wasn't happy when it was messing around this long, and I took profits right about there because I previously saw that those sellers had slammed it pretty hard in their face. So they should have done the same thing, and they did, right? They did. I think I took some profits off here, but I was expecting it to take out the lows a little bit faster. Now, ultimately, it did take out those lows, and I covered that trade a bit too soon, right? Should have held it for the whole thing. But, you know, we ran into lunch hour right there. I just got impatient. I had things to do. I had to run around and do some banking. But you can see that by watching tick by tick, watching price by price, by putting the context together, seeing how price is reacting to different things. Remember what we're trying to do. We are trying to gather the most valuable commodity in the world for traders. Information. Okay? So, this is just a nice little reminder for my existing older clients that are with me for a long time. Remember what you're trying to do at the end of the day. You are trying to build a context about the information that you are seeing, which is the net result manifested on the chart. Man, I had to run out and do some banking, but I had quite a few shares. When I took off my profits here, I didn't hold for those lows. That's an extra 41 cents. I would have made an extra $500 on that trade. Actually, I would have made an extra. That would have been an extra 5% net result on the account that I'm trading right now. Now, here it doesn't always work. ZDGE, right? This is one that I started shorting right here at 263. Why did I short? Right? You could say they were pressing limits, and we were at value and liquidity, right? But it wasn't that. It wasn't the pattern. It wasn't so much what it was. It was how it was doing it, because I had watched very specifically this big stuff here, right? When that market tried to jump up, it just got slammed. And it got slammed way harder than the move higher. So as this was moving higher, it was moving higher with relative ease, as you can see by all the green candles. Easy breezy, there was nothing getting in the way of it. A few small pauses. But when the market opened, somebody big just slammed it in its face. And that told me that I could lean against those sellers, because they'll probably show up again. And that's exactly what I did. Very, very advanced trading, right? But not really. It's actually quite easy, because again, when you remember what we're trying to do, we're trying to figure out what the information is in the actual market. This is a pit. This is a market, right? A market is alive, it's dynamic, it's changing. And you've got to know, and you've got to be very aware of how that market is changing and adapting and moving, so that you can adapt and move along with it, right? Okay, so there really isn't any lesson here as far as anything new is concerned. But as you go, for you new guys, as you go through this class and you're going through all the educational videos, all the different pieces and parts and moving pieces that I teach you, remember what you are trying to do at the end of the day. Okay? Remember what you are trying to do, and all the other stuff that you're going to learn along the way is going to be really valuable to help you do that, right? And all the ways that I teach you to do that, you're going to learn that in the next 12 lessons. And for you guys that have been with me for a longer time, I don't want you to lose the forest through the trees. Okay? Yes, it's really easy to look back at some of the trades that you take, and they seem really, really simple, right? If we look at some of the trades that we take, and we see, okay, buyers are in control, and they buy here, and there's a good buy here. Like, yeah, I mean, it's really easy to see that, and you guys know how to spot the danger signs, right? But you still have to remember what you are trying to accomplish, right? And you have to remember all the little pieces along the way that tell you that that was a safe trade versus a trade or safer trade versus a trade that doesn't work. I haven't seen you guys post a trade that doesn't work in a long time, right? But let's say that this trade here, let's say you bought this one right here and that one failed, right? Well, the devil's in the details, right? The devil's in the details. Why did that one fail and then this one work? Well, if you were watching how those candles were working, you may have had a better idea that that one was going to fail and then this one was going to work, right? So remember what we're trying to do. We're trying to build the context, build the story, use all the rest of the information that you're going to learn in the rest of the class, but at the back of it all, at the baseline of everything, a very, very baseline, all boils down to this. What is the information telling you? And because we can't be on the floor, we can't see all of those things, the only thing that we have left to rely on is watching those candles, okay, and watching that market. Okay, any questions at this time? Because that's pretty much it for this lesson. Yeah, Philip, for you younger guys, the new guys, I don't want you using delta volume, okay? Please do not use delta volume. You are not ready for it. And I don't really use it too much. Like, it's tricky. Sometimes it will give you, like, you'll think there's a lot of sellers in this market, right? So here, if you look at this area right here, it's an indicator, okay, guys? And you guys know how I feel about indicators. They don't work, and you shouldn't be using them because they'll only confuse you. But if you look at this period right here, where it looks like there was a lot of sellers there, right? Well, you would think that those sellers would get stuffed and the market maker would squeeze that higher. So delta volume lied to you. Okay? Because those sellers were actually smart money that were using it to push it lower. So I will show you how to do that, Philip, but I don't want you to rely on it. I don't even like to use volume, right? Volume and delta volume, they just throw an added level of complexity into it, okay? But it's very simple. Go to indicators, search for delta volume. I think it is delta volume. Delta volume. I'm not sure which one of these it is. It's one of these. I think it's this one. John was here, he'd know how to find that out. I think I can look at it here. I don't know how to find out which one it is, but it's one of those. Okay, but Philip, please use it with caution. All indicators, opposite of price. Price is everything, guys, okay? Price is everything. It's everything. You don't need even volume. You just don't need it. It's all going to be there in the price, okay? And okay, Philip, you got my warning. If you want to put it on there, see if it helps you. But if for some reason it makes you make mistakes, take it off right away. Okay, I just can't stand it when you guys start adding indicators onto things, right? It drives me crazy. Like, you've got to learn how to walk. You got to learn how to crawl. Then you got to learn how to walk. Then you got to learn how to run. Okay. Renee, when players resist, that means they stay out of it, right? No selling, no buying. I'm not sure what that question means, Renee. Okay. Okay, so resistance just means they're selling. You're going to see that in the price, right? Okay. If they don't resist, it means there's no resistance. Like, was there any resistance in this price? No, it's just green, 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 green. There was no resistance. But what about here? There's massive resistance, right? Okay. Okay, guys, so that's it for this lesson. For you new guys, I want to just repeat something. The way this works, and I did it intentionally, the way this works is that you, one second. The way this works is that you do first and then watch the next video after you do the homework, send the homework to me, or some of the other guys may comment. You are not going to understand everything right away. It's like ridiculous, okay? Like when I'm teaching you step one, you have to learn how to pour the concrete. And while you're pouring the concrete, you're asking me how do I hang the light fixtures. Okay? That's like so dumb, right? I told you this is a process of 44 years of my life. So you do each video, you get the concrete right, laying the concrete right. Don't ask about the hanging the light fixture. We're miles away from that. Just focus one step at a time. The problem with everybody that they come in and they want to learn how to make money right away. Impossible. Impossible. Right? You haven't even built the foundation yet and you're trying to sell the house. Right? Give me a break. You can't sell the house. You can't make money on the house till you build the foundation, put the frame up, put the plumbing in, put the electrical in, plaster the walls, hang the lights, decorate the outside, do the landscaping, then do you sell the house. Right? And the problem with a lot of people when they're learning to trade, they're trying to sell the house first without even knowing how to do the rest of it. And that might be a bad analogy because you can sell a house, but it doesn't work like that with trading. You have to understand all the little things because if you want to learn just how to sell houses, There's 1,000 guys on the internet that'll sell you these trick trading bullshit. Patterns, a special indicator. Yeah, right? There's no shortage of snake oil salespeople that are trying to sell you garbage, tricks, how to sell a house. But the truth is that will only last you a very short period of time when we're in that market condition. And when the market condition changes, you won't know how to do all the other things that you need to do in order to sell a house from the ground up. But there's no shortage of people selling you easy trick trading. I'm different. And that's why my traders think that my coaching is the best, because I give you a very, very thorough, very deep understanding of how to build houses in any market. Some markets, mansions will sell. Some markets, townhouses will sell. Some markets, condos will sell. If you don't know how to build them all from the ground up, you're just a trick trader. You're going to have a couple of good years and you're going to give it all back. But you guys are with me and you're never going to give it back. And hopefully you're going to have a 44-year career like I am. So for the new guys, one step at a time. Master each step before you start asking silly questions that are not relevant to that, okay? And then usually the question, not that there are silly questions, but there are just questions that waste your time and waste your energy and get you distracted. Focus on building each step of each of the 12 videos along the way. Master each one of those, and then you'll be here in 44 years like I am. Okay, guys? Love y'all. Bye for now.